But there was a pivotal moment, Brett, that really like changed the trajectory of our lives and our business. And that's where we started to look out of state to invest. But my wife and I became very intentional on let's choose a market that is more conducive to our goals, where we can get better return on investment, that has better growth potential. And, it was a bumpy start investing out of state at a distance, but we really refined that over time to be intentional on where we were investing.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins.
Today's guest started investing in real estate while working as an optometrist and a captain in the United States Air Force. This eventually allowed him to retire early from his career in medicine. He's now the founder and CEO of Rent to Retirement, the nation's leading turnkey investment company. He's a seasoned real estate investor, licensed broker, has accumulated a large portfolio of rental properties across multiple markets across the United States, including single-family, multifamily, commercial, and new construction. He is still a licensed optometrist who practices on a volunteer basis. You're going to want to hear this conversation because it's all about finding your passion and finding a way to do your passion by choice. Today's guest, please welcome Mr. Zach Lemaster to the show. Zach, welcome to the show. I'm excited to have you. It's been a little while here, and I've been looking forward to this episode and this discussion. So thank you for your time right out of the gate, man.
Brett, I'm excited to be here. I appreciate you having me on. And hopefully my background and story will resonate well with your audience.
I love it. I love it. And I can't wait to share this with the listeners here. So first, Zach, let's talk a little bit about where your professional history is and where you're at now, even professionally, and how you got there. I'm just so excited to get into this. So let's just lay it out there. Where did you start from and where are you at now, Zach?
Certainly. So like a lot of people, Brett, that find themselves full-time in real estate, I didn't start here, and I didn't plan to be here, quite frankly, but I have a background in healthcare, as many of your audience does. So my wife and I are both optometrists by education. We met in school. I was on scholarship with the Air Force, so the HPSP program. I was commissioned as a captain in the Air Force, practiced optometry there for 7 years, bounced around, a station in Germany and a few different places. But somewhere along the lines, like many people, I think I read what we call the Purple Bible, or the Rich Dad Poor Dad saga, right? And that just a little light bulb went off about how to think about money, and read a lot of other books as well, like Millionaire Real Estate Investor Gary Keller, and just a lot of different things. But I was interested in real estate because it was a tangible asset. I always wanted to be someone who's just a good steward of my money and understood what I was investing in. I've never been a stock guy. I never really fully understood it. It's not tangible, a lot based on opinion. But anyways, I was a captain in the Air Force. My first house I bought was a duplex, lived in half, rented out the other half. Thought this is a beautiful concept because I can live for free. I can buy an asset really with no money down with a VA loan. And then I moved out of that and kept it as a rental. And so that was kind of the catalyst to start investing. And the next year we bought a couple more duplexes, a couple more. And kind of compounded that over time. But there was a pivotal moment, Brett, that really like changed the trajectory of our lives and our business. And that's where we started to look out of state to invest. Obviously, in the military, you're bouncing around a lot. You're not necessarily tied to a specific location. But my wife and I became very intentional on let's choose a market that is more conducive to our goals, where we can get better return on investment, that has better growth potential. And, it was a bumpy start investing out of state at a distance. But we really refined that over time to be intentional on where we were investing. And that allowed us to skyrocket our portfolio, eventually retire from our career path in healthcare. Following the Air Force, we moved out to Denver, which we're still at today. We worked in private practice. But at this point in time, we're pretty much just keep our licenses active and work on a volunteer basis. And through real estate, growing our portfolio, we're able to retire early and just like have a more global impact. We do, as I mentioned before the show, we have a volunteer humanitarian effort establishing cataract clinics in third world countries and things like that. So it's been a journey, but real estate's allowed us to really live life on our terms and practice on our terms and make a more global impact. And that's really what our business does, is allow a Rent to Retirement, helping people acquire assets throughout different parts of the country where there's good investment opportunity, where we're handling things for them, right? For management, property acquisition, financing, so they're not having to buy themselves another job. I know we talked about that. So, but that's about as condensed as I can give you in my story.
I love it. I love it. So picking up the first duplex and then multiple duplexes, and then I guess, taking the knowledge and experience and applying that in different markets. And when you say, not investing where you're at or jumping kind of like that virtual kind of acquisition piece, how are you able to make that happen? How are you able to invest in different markets, really ones that you didn't live in? Because I hear this a lot. Well, I need to be close in case I need to go there.
Yeah, and I think that's a limiting belief for a lot of people, right? It's the first question I would ask them is like, why do you need to go there? Should you even go there, right? Like, it's and this is definitely something I've learned as we've grown our portfolios, just about like building a business and working on your business, not in your business. A great book is The E-Myth by Michael Gerber, but really about approaching real estate investing like a business. And once I started to look at it like that instead of more or less like a side hobby, it allowed us to scale our business. But to answer your question, I mean, quite frankly, investing out of state for the first time, we did it wrong. I mean, we did, we actually we actually bought through a turnkey provider at that point in time, and really had a terrible experience because we trusted a lot of the information that was provided to us on a pro forma, just an evaluation on paper. We ended up buying some D-class assets in Southside Chicago that were rehab really good, looked good. Numbers looked good on paper. In theory, tenants tore the place apart. We had Chicago Housing Authority and Section 8 tenants that was just a nightmare to work with. And we just did it wrong. So that's our first experience. But out of that, we were able to say hey, we understand you can still be successful investing out of state where there's better opportunity, more than likely, but there's probably a better way to do that. And that took a lot of time, right? Connecting with the right people. I mean, for property management, for example, to find a good property manager, sometimes you have to go through 20 bad ones. That's a lot. That's really time intensive and frustrating and expensive. But that was a focus of our business, is try to lay the groundwork for people for that. So anyways, yeah, investing out of state was not an easy thing for us at first.
And how do you know which markets? Like the south side of Chicago is absolutely probably like one of the last places I would ever consider investing. What makes a good market?
So now we have a very, intentional and systematic approach on where we choose markets, both on a macro scale and a microeconomic scale. So generally speaking, our company focuses in two main geographic areas where we see a lot of opportunity. That's the Midwest and the Southeast. These are areas that have things like landlord-friendly legislation, low taxes, population, and economic growth. We do 80% of what we do is build to rent new construction homes in the Southeast. Obviously, there's a big population shift down the Southeast, as you well know, being there. So these are areas where there's an undersupply of housing. So that's first and foremost areas we want to be. We want to be below the median house price point. So if the average house price point across the U.S. is give or take $400,000 right now, we want to be well below that. Most new construction we focus on is $200,000 to $300,000 or, low 300K, because that gives us the largest pool of both tenants, but also resale buyers, when it comes time to sell the property. We want to look at where places that have a diversity of industries, areas just are not reliant on, say, one industry like oil or gas, areas where you can be a landlord and build a business around it. We have people that attend local, community meetings to see where transportation is being developed and jobs. And so, I mean, it takes extensive research to identify, but at the end of the day, a lot of, not to oversimplify it, but if you can follow supply and demand, I think that also puts you in a good position to have a productive portfolio over time. So those are some of the things we look at. And then ultimately, we buy our own portfolio in these areas and we see how they perform. And once we have confidence both in the market as a whole, the property management team, the lender, the insurance, all the pieces that we're putting together for ourselves and our investors, then we'll bring that to our general investor community.
Nice. And then what makes, I guess, the market, we talked about macro and micro looking at it, but what makes the market make sense when it comes down to the return of your money invested? What are the objectives that you would be shooting for?
So if we're evaluating like a cash on cash ROI, we want to hit a metric of an 8 to 10% cash on cash ROI. And that's based on using a conventional loan, like your 20% down, 25% down, Fannie Mae, Freddie Mac loan, 30-year fixed loan, where you're acquiring an asset where you're going to have positive cash flow on it, right? So that comes into like rent to price ratios, affordability of the market as well. So for example, a $300,000 property, we probably want to see rents in that $2,200 to $2,400 range, where we know even with current interest rates where they're at, we can have a successful cash flowing property. But we also want to be conscious of future growth. Like when you're looking at a pro forma analysis of a property, that's year one estimated performance, right? We want to look at what the supply and demand is for the area and growth potential. Our average rental increase, Brett, from year to year is 6%, which is double the national average. And we're able to accomplish that because we're in areas that are, are in demand. So those are some of the things we try to look at. But in addition to that, there's a lot of creative things we can do to help exceed just the standard ROI projections. For examples, we have credit unions that will offer low down payments, like 5% down investor loans. We have unique options where rates can be bought down. So there's all types of interesting things that we can combine in the acquisition to meet the numbers that we need to.
Are you seeing DSCR loans in these types of arrangements, especially on the build to rent, the BTR style investments?
Yes, to some degree. That really depends on the borrower. I mean, our goal is essentially what we do at Rent to Retirement is we identify the best locations throughout the country based on some of the criteria we talked about. We build our local teams and systems in those areas to offer a turnkey product to our end investor. And this is a house and turnkey is one of these buzzwords out there that is really ill-defined, but this is a house that's either newly built because we do the majority of new construction, or a house that's fully renovated, leased, and managed for an investor so they can easily acquire assets in some of the best markets throughout the country without having to buy themselves another job, right? They can be somewhat of a passive investor, but still access, quality properties across the country that fit their goals. Part of that is connecting with the right lenders. And the right financing options. And so it really depends on the investor. A lot of people are buying the traditional conventional loans right now, but we have some people that go the DSCR route. It all depends. We have a curated list of of lenders that we've networked with and quoted, and sometimes they offer discounts for our clients. But some DSCR lenders, if you're a self-employed investor and you can't qualify for a conventional loan, maybe that's a route to go. Or if you are someone who has maximized your 10, conventional loans and you need to go the DSCR route, that could be an option for you. If you're an international investor, we also have those as well. But there's also portfolio loan products by local and credit unions, like I mentioned. So, for example, on that loan structure, we have credit unions that will offer a 5% down it's a portfolio loan, so they hold the loan in house, where you can buy up to 5 investment properties with as little as 5% down. It's a 30-year loan, but it's a 10-year term. And that's not necessarily a DSCR because they are underwriting you as the investor. You still have to qualify for that and have good credit. But that's just one example of unique loan options where you could potentially use that to stretch your capital further. Mm-hmm. So we have, to answer your question in a very long answer, we try to connect with the right lenders that offer the best options for the investor based on their goals.
Very interesting. And these properties, single family residential properties for the most part, you said conventional. And when somebody takes a conventional loan, we're talking about they're having it titled in their personal name and they're getting the loan in their personal name. Do you see clients then do the quick claim to LLCs? Or I know you're not an attorney and I'm not asking for legal advice, but I'm just seeing what are you seeing out there? Because you have more attractive terms when you do a conventional, more attractive rates, all of these things, but you have a little more liability when it comes to, especially a turnkey, if there's a tenant in place already. So do these get quick claimed over to LLCs?
In most cases, yes. I would say that's a very common practice. That's what we do with our own. If you're buying the loan in your own name and then transferring to an LLC for liability protection, it really doesn't make any difference tax wise. But if you're a high income earning, individual that has other assets like your own primary residence, your practice, whatever the case is, yeah, it probably makes sense to protect, your other assets and separate those out with an LLC structure. And there's a lot of different ways to do the LLC structure. So again, from a comprehensive approach, when we think about a turnkey investment, it's not just buying a property in a good market that's leased and managed. It's also about setting up the business plan around what makes sense from a a legal standpoint, from a tax perspective, right? We have real estate specific attorneys and CPAs that we give full access to our clients to guide them through that, because there's a lot of different ways you can set up LLCs with land trust, Series LLC, whatever the case is. So, that's pretty common.
Yeah. And everybody has an opinion.
Yeah, you talk to 10 different attorneys, you'll get 10 different opinions,
Yeah.
right? So
I love those conversations. You're in those conversations for the listeners too. I got one hand, two hands. I got both my fingers pointing up. In those conversations, the fingers cross and like, oh, well, that person, this person, and everybody always has a better idea. So I always love just to ask those questions based off of experience, not of legal matter, because everybody's situation is going to be a little bit different too.
exactly.
Very interesting. We talked about something that you learned in the acquisition piece, in that early acquisition of a turnkey. What are some of the other things that you've picked up through the years that are kind of on that list of things that you wish somebody would have showed you that you didn't have to pay the tax on, right? I heard somebody was speaking with the other day called it the DAT tax, but it's very interesting. So some of us call it a tuition. So what is this list of things like, man, I wish I knew this going into the single family world or the turnkey world? What are some things that pop into your mind, Zach?
Yeah, so much. Like a lot of your audience will pay hundreds of thousands of dollars and go into significant debt to get a degree. And it's, sometimes in real estate, you can also pay for coaching, which I actually think there are very valuable. There's substance to that. There's a lot of gurus out there, but investing in yourself, I think, is an important thing. But sometimes this is a school of hard knocks, right? And so that's the way I always look at mistakes. One of my mentors always told me, he said, Zach, in real estate, I've made a lot of money, or I've learned lessons. And that was his way of saying like he lost money, but, he's learned lessons along the way that has allowed him to be a more successful investor. And yeah, some of those lessons can be very expensive. I guess just on a high level, I mentioned this already, but not just having the closed mindset of, hey, I have to invest locally because that's what I know and feel comfortable with, right? You look at very successful investors, they're likely diversified across multiple markets. The U.S. is a diverse place. High likelihood that there's a market that's more conducive to your goals and better performing than your local market. And that's just being conscious of operating like a business. So that's one thing. That was a pivotal moment for us when we figured that out, right? A lot of our investors, they invest because their local market doesn't make sense from a number standpoint, or it's too expensive, or they just want to be completely passive, or they're a newer investor, whatever the case is. Networking with the right people, right? We all hear that your net worth is your network. And that's, I think, very true. Connecting with like-minded people. Don't be this lone ranger in business and in real estate. Attend local RIAs and connect with people, listen to, podcasts like yours, Brett. Partnerships are really important. I've lost millions of dollars in bad partnerships. And I think, saying again, it's just dating people before you marry them and just going slow. Partnerships can be an extremely powerful tool. When you're buying property, don't cut corners, go through due diligence, always have your normal appraisals and inspections, right? That's what protects you when you're buying property, especially out of state, right? Most of our investors buy sight unseen, and they feel comfortable doing that because not that you have to do that, but they feel comfortable doing that, going through, proper due diligence. My investing mindset has completely transitioned over the years, because when I was first investing, it was like all about cash flow, right? And I think a lot of investors have this mindset where it's like, if I have $300 a month from this one property or this one door, and if I have 10 doors, then, 3,000, like I can reverse engineer my financial freedom date because they're focusing on cash flow. It's tangible. It can also vary quite a bit. Cash flow comes and goes, right? But over the years, I've really learned, and this has made me even more excited about real estate. It's like I invested in real estate for all the other things besides cash flow. Cash flow is great. It's a necessity. I want this property to support itself. But when we really look at the tax benefits and the way we can use leverage, and I mean, just nothing else comes close to it. And, building wealth over time in real estate, because it takes time, investing in areas that have stronger appreciation. That's why we focus on new construction. That's where you really build wealth. But yeah, like our investing strategy now is really tax focused. We do a lot of cost segregation and accelerated depreciation on properties where, we have a successful business and we're able to write off all the income every year because we're buying enough property to accelerate the depreciation, which means we have more money that we would otherwise give to Uncle Sam to actually have a return on it to buy other assets that have other tax benefits. So and we help our investors do the same thing. We have a lot of high income professionals, even if this is your first property where you won't qualify as a real estate professional. Well, did you know that you can buy that property, operate it as a short-term rental for the first year that you buy it? The next year you turn it over to management or whatever, and you can still take accelerated depreciation against your active income, as a doc and make a huge impact. And we have a whole platform of like, do this, this, and this, right? It's not turnkey. It takes work. Yeah. But we will walk you through that. So I don't know, without being too long-winded, those are just some things that I'm like little light bulbs that went off along the way.
And what does that look like for the listeners who want to learn more about rental retirement? What is that like? Walk us through was there an onboarding process to reach out to you? How do we contact you?
Yeah. So, our whole goal, our mission statement is to make the best turnkey deals across the country accessible to everyone and handle everything for you and give you all the tools and resources you need to be a successful investor. But essentially what our process is the first thing we want to do is connect with you, have a consultation, learn about your goals, your investing experience, ultimately what you want to accomplish, and then see if it makes sense, right? To buy a turnkey new construction home, maybe somewhere in the Southeast. If not, let us give you some tools and resources that make sense for you. We don't charge investors anything. We make our money through selling houses, right? Building and selling houses. But it's just about adding value. If someone's interested to, see some of the market data we have or learn more about connecting with us, they can go to our website, which is renttoretirement.com. That's renttoretirement.com. Or you can also text REI to 33777 and set up a consultation with one of our team members. But yeah, we have a lot of information. We have our podcast and YouTube channel out there sharing market analysis and, different creative financing options that we're happy to share with anyone that's interested.
That was REI to 3337. Is that correct?
REI to 33777.
Your 5-digit number.
There you go.
Right on. Well, man, that's awesome information. So much information on the renttoretirement.com website as well too. You mentioned some of those Southeast markets. What are some of the markets that jump out to you out front that really are attractive in the Southeast area?
So we're very excited about some new partnerships with some national builders that we've been able to form recently. These are guys like LGI, D.R. Horton, where essentially they have excess inventory that we don't have to build ourselves, but they're going to wholesale to us, right? Like we do volume as a community, the rent retirement community. And so we're able to go to some of these national builders and say, we want a wholesale type of discount on your properties like an institutional buyer would have access to that the individual buyer wouldn't. And so we get to pass those discounts on to our investors. Some of these houses we're able to acquire for like 10% below market value and things like that. And those builders are specifically building in the Southeast. These are areas around like secondary markets outside of Orlando, so Polk County, where, because they're way more affordable and people are moving out to some of these areas, but the rents are still relative to where they are in Orlando, so we can just make a killing on those. We like Southwest Florida, so areas like Fort Myers, also in the Panhandle, Pensacola, very active in Florida. Alabama around Huntsville and Tuscaloosa is another really good market we're seeing a great success with. We also do some coastal stuff, especially with the short-term rentals. Texas, Carolinas, some of these, the Sun Belt really, I think if you're positioned well, there's just a lot of growth happening in these areas. And those are where we get some of those unique opportunities to buy properties below market value with some of these national builders that have excess inventory right now.
Yeah, very interesting. Very exciting. So much information. So thank you again for your time today, Zach. I just have to rewind and keep listening to this because the years and years of experience that are tied to each one of these learning moments have so much value.
Brett, thanks so much for having me on. And hopefully your community found value, and we're happy to speak with them if they want to reach out.
Perfect. All right. Well, until the next time, also thank you to the listeners out there today for your time and most importantly, your attention. So often we think that we are following along or we're bringing value because we're sharing our time, but without your attention, there's really not much there. Being able to focus that, and especially in real estate, focusing in the right area and the right time. There's no better time than now. You just got to be open, looking for the right lending opportunities, the right acquisition opportunities. There's no better time than now. So thank you for giving us your time and your attention now. This is the Real Estate Mogul MD.